Welcome. This is the December 3rd episode of the Trading Pit, where we break down the Bitcoin and crypto markets with human and AI insights. I am your host, Marconi White, and today I'm joined by Benjamin, the whale hunter, and Amit, the range sniper, who will answer where's the next big trade. After that, Ben Lilly will be joining us for his second episode, breaking down the state of the network for Ethereum, Bitcoin, Solana. I'm not sure, all three, maybe, what all that might mean for the performance in the coming months. But we're not done, because today, Benjamin and Amit have a very special announcement about a new product launching today. I'm very excited to hear about that. You're not going to want to miss it. But let's get started. First, it's going to be rapid fire, where I'm looking for hot takes and complex questions. Benjamin, Amit, are you guys ready?
Let's go.
Oh, yeah. Let's go. Bring it in hot. My gosh, it's good. All right, Amit, XRP is up 70% in the last week. Is this rally over or just getting started?
The XRP, there is a lot of fear. So if you look at the current state of the chart, it looks like, for the time being, it's taking a cool off. But it's again at the back of what happened with SEC and all. This is picking up pace. This is not stopping here.
Okay, well, maybe we can get a little more details in a little bit on how far this can go, whether or not it's still a good trade for the week. Benjamin, XRP just ran, as we just said. I did many other Dino coins, such as Hedera and Algorand. Is this profit rotation from Bitcoin holders? Is this new capital? What is it?
It's rotation.
It's rotation
from everywhere. So memes were also, it's mainly rotation. But I think the Dino coins running is primarily because those are still the gateway tokens to a majority of the boomer platforms. You can call it as, be it Robinhood or like PayPal or any of these standard apps that Western retail would use. These are all the tokens that they know of. You can't expect them to jump into BMX or GMX or something like that. They go for the familiar ones because for them, crypto is basically like 10 tokens, right? So right. I think that's one of the narratives. And these tokens have been like bogged down for a while now. It's been like 3 years they've been under massive consolidation. And I know for a fact that a lot of market makers used to short them and so on.
Okay. So it is a bit of a rotation. We can get in to figure out how long this is actually going to rotate. I'm very interested to hear some more thoughts on that. We'll come back to that. Amit, next question here. Meme coins or AI agents for the win in 2025?
AI agents, hands down.
Hands down. That's confident. Are you getting paid by an agent right now?
I'm building few.
Okay. Maybe you're hinting at something coming out a little bit later in this product launch. Again, stay tuned. You're going to want to hear that. All right, Benjamin, best return for the next 12 months, buy and hold, human trading, or AI trading?
AI, of course.
Of course. All right. Yeah. You said again, we're going to have to bring that enthusiasm up. For all those who don't know, that was a big, exciting roar from Benjamin. That's his volume 11. He cranked that one up for you. All right, well, let's get into the price action. No delays right now. So let's get into Bitcoin. As I'm looking at the chart right now, it's 93,930. It ran up again. I think last time we were here, it was maybe the low 90s. It ran all the way up to around 98, 99. Still not able to get over the six-figure mark. Last week, we were talking about the fact that we had legendary levels of sell pressure around that zone. Now we're back down, retesting the 92K level. And the question becomes, is 92K going to hold? If not, what's going to happen afterwards? What are we looking for some new entries? So Benjamin, walk us through what we're seeing from Bitcoin's perspective right now. Where are you expecting it to go from here?
The beauty is that we are still with the same, analysis and same chart from last week, because nothing basically changed on the coin, which is a great factor. It helps us focus on, building and rejuvenating and plan for other things. So when I look at BTC, what I see is that it's still under consolidation because there is a bit of rotation happening. Dominance pulled back down a little. So basically, we saw total 3 bombard with tokens like LTC and all of them basically gaining a lot of momentum. LTC, BTC, for example, has been breaking out. So many such altcoins on their BTC pairs, they've been breaking out. I don't necessarily see that as a bad thing, because like this is a long-term accumulation breakout that's happening, which is still a good sign of like what our king of crypto says, CZ from Binance, like what he says, it's alt season. So we just have to wait for the correction to be complete on BTC, and then basically it gets a little easier for a lot of alts as well. Probably a good re-entries happen. But as far as isolating to BTC is concerned, the good thing is the 4-hour 200 moving average has been rising up and is colluding with the VWAP supports at 86 to 88K. So if we do drop below 90K, I think that's where we probably stop. I do not know yet if this is a correction that's going to be that deep, because there is a little bit of political instability that's happening in South Korea as we speak. It's a developing situation, and BTC Korean pair basically took a 30% drop. So that basically probably opened up a lot of arbitrage opportunities. So there are sellers here, buyers there, and a variety of shenanigans happened during this period. So I would not take the past 2, 3, 4-hour candles and evaluate the market. However, the support levels remain, and if we break 96K convincingly again on a daily close, I think we run up. But until then,
is that enough? When you say we run up, do you think that can take us above to the 6-figure mark?
Yes, I think it is.
Okay.
Because we have basically consolidated for nearly 10 days now. Like I think it was around 22nd that we hit the top. And basically after that, we've just made lower highs in a way, if you look at it. So yeah, that's consolidation. So probably we do like a triangle pattern over here, do a wave 4 type of a pattern, like what wave guys say. But overall on cash flow side, there's been tether coming in. Like there was a rumor that BTC was moved by US government. Their holdings around 10,000 was basically moved into hot wallets on Coinbase. But I think it's probably, and the consensus basically right now is that it is already sold. So the market has basically absorbed 10,000 Bitcoins. Sailor has been buying billions as well. So market is basically consolidating.
Yeah, no, he's definitely been putting that out there. I want to come back to you in a minute, Benjamin. The question is, are you seeing any stress on the over-the-counter desks? Are they saying that there isn't enough Bitcoin? I want you to answer that. But first, Ahmed, I want to come to you. You know, you're always looking at this from a weekly perspective. How are you trading this? What zones are you looking at? Last week, I think you were looking at the 86 to 88 to get a trade. That never happened. Is it the same setup this week, or is there something else that you're looking at?
Can you see my screen?
Not yet. Not yet. Here we go. There's a thing of beauty.
Right. So last week, this is where we were having the discussion, and we were saying, or basically, I thought that there will be a technical bounce going up to the high, previous week high, and that's how it played out. So again, it is sitting in, again, looking at the ranges, it's sitting at the Monday low. If this holds up, then there is a trade up, but I don't think this will hold up. This will at least go to previous week low, and from there, if the bigger correction comes, it's going for 86 to 83. That range, I'm still waiting, because that's where my stink bets are. And on the order book side, there is a lot of support sitting at 90K across all the exchanges. So Coinbase, Binance, BitMax, Bybit, all of them have massive walls sitting at 90K. So I expect 90K to get hit, and that would be a good entry. But if that fails, we are sitting in basically 86 to 82. But I won't take a trade here, because I'll wait for another at least 4 hours for this candle to basically show its hand, whether it is going to break down or it's going to run up. But most likely it will break down.
You mentioned the order book, a lot of support sitting at the 90K level. Again, last week we talked about legendary sale orders sitting on the books, really making it very difficult to hit that 6-figure mark. Has some of that been absorbed? Are you seeing that there's going to be less sell pressure sitting around that 100K?
Increased, actually.
Nope, nothing has changed.
So sorry, you said nothing's changed there. Benjamin, were you saying that that it's actually increased the amount of sell pressure we're seeing?
Yeah. There's more sell orders over there. See, it's going to take some time, and like the contrarian thesis always remains that no, we're going to geese through 100K with like nothing, like cheese knife. But it's difficult because 100K, like I said last week, it's been a dream level for a lot of people, right? And everyone knows when you reach 100K, there's going to be a lot of retail selling. So everyone tries to front run that, and that's basically what we are seeing right now. That's why we're making lower highs, because as soon as price tries to go to one of the highs made this year in the past month, then basically you see sell pressure comes in and then price just drops. So it will take a bit of time. I don't think it will run up hard. That is precisely why alts are running instead. The rotation is happening into the alts instead, while BTC consolidates and finds more liquidity. And gets all these sellers basically out, and then another round of accumulation basically happens, in my opinion.
Fair enough.
It will take some time.
Well, so I wanted to come back and see if you had any perspective on that comment I just made about the OTC desk not having enough Bitcoin. I looked at some of the ETF data before we got on here. Bitcoin is now at 31 billion in terms of annual flows. Of course, a lot of that is going to be the accumulation that we've seen, or just the price increase that's gone from 70 to 90 since the election. Ethereum also had about 601 billion. Sorry, I have to go back and look at that number. But several billion that have actually come in now, and I think it's net positive now after there was a lot of sell off from Grayscale. So is there a perspective at all with some of the people that you're talking to? Is there any stress in the marketplace right now, or is that just kind of trumped up to try and get some attention?
If you remember, in early this year, right during the ETF season, between January and March, we had this discussion about the overnight lending demand, like the overnight repo rate for BTC. Between the desks, and in order to showcase supply, in order to showcase collateral for ETFs, and a lot of those things basically had shot up to more than 18% or so. And there were instances of 21% that people were willing to pay in order to show in the books, so that because for collateral requirements and all that. On the contrary, this time the request that I had today morning was basically most of the prime brokerages are increasing the loan rates for the stable coins that they basically, the stable coin loans that they were operating at. The demand for a stable coin has shot up. If you take Aave, the yields for Tether and USDC is sitting at 30%. That's the rates it's sitting at, and prime brokerages basically have upped the rates as well to 16.5% right now. So what I see is basically leverage starting to come into the market.
So you're not really seeing the pressure for lack of Bitcoin. You're seeing leverage come in and rates going up on stables. Just to summarize what you just said.
That's what data is saying.
Okay.
So
when have you seen?
It can be interpreted in multiple ways, right? So I don't think it's necessarily bearish. I just think of it as more risk-taking tendency coming into the market. And where that borrowed risk goes, it may be into BTC, it may be into Moodeng. We don't know, right? Yeah. It's hard to know. But it definitely seems like, there is interest back in the market. Because whenever loan rates rise, it's basically more trading demand and, risk management demand coming into the picture. Because often what desks do, they continue to keep the collateral and borrow funds and trade it instead of using their cold wallet funds. That is like, how to say, it's more for security purpose and also risk management. Because if you get liquidated, you have a legal procedure that you can go through in order to settle those things, while you still use your cold wallet funds to continue running your shop. So for a lot of reasons, people basically take up a loan model by taking up a collateralized approach. But yeah, if those rates are rising, it means that there is a lot of trading interest, probably because altcoins are popping. Because typically these are prime brokerages, which means institutional capital, right? When I say institutional capital, it's basically market makers, large trading desks, mid-cap funds, and like almost all liquid traders. and their avenue is always direct market access, which is Binance, Bybit, OKX being the primary exchanges. So they don't care about the 49,000th Solana meme coin. They have to care about the tokens that they're able to access on the exchanges. So they are probably doing the trade that what I was explaining last week. If you are so bullish on a Solana meme coin, long Solana instead, you'll still make the same money, right? So you'll still make relatively risk averaged, like asymmetrically higher return compared to betting on like hundreds of meme coins and thinking that you'll make it through in most of them. Math doesn't work that way. So I think that is the thesis that these guys are applying, in my opinion.
So I guess a question about that. You mentioned it's difficult to say exactly where the leverage is going. It's not necessarily bearish. Have you seen this before in, going back over the last 4 years, 5 years that you've been here and communicating with these various brokerage houses? Have you seen this happen before?
No, because rates never went up this high. And there are two reasons for that. One reason is that the general lending rates were not this high. Right? So in 2020 cycle or 21 cycle, interest was almost nil. It was free. So when you do, in those situations, we used to see that FTX or Binance, basically the max they used to give was like 5 to 8% on one side. That is the yields that we used to get. In Aave, yeah, sure, it had its own time where it fluctuated a little bit to 11% or 15%, but those were always unsustainable yields. But what we are seeing right now is across the market, lending rates have gone up. So yield rates have gone up. So which means it's a different cycle because the starting slab also has changed, right? Because the liquidity providers are basically getting it at 7 to 8%, and they're trying to give it out for like 50%. And then the brokerage tries to charge a 2% on top of it. Everybody money over there. Okay.
Yeah.
But yeah, some sort of deleveraging will happen. I do not know how it will happen because 16.5 is basically a lot. And it will very quickly hit 18 if this continues for like 3 or 4 weeks. If we do have an all season for the next 3 weeks, then I think we have a significant deleveraging event that will happen.
Okay. So your mic, at least on my end, sounded a little bit garbled, but it sounds like this is something, again, you haven't seen before. It's a lot of leverage that's coming into the system. We just need to be aware of that. And as you said, kind of monitor it, because if it continues to go up and these rates continue to be as high as they are, we could see a pretty significant deleveraging by the end of this month, as soon as by December 31st. So, okay.
The consensus thesis is that by the time the inauguration happens, we will probably have one cycle complete or one portion of a cycle complete, because the uncertainty increases on the erratic behavior of the president-elect once he becomes a president. We do not know what Pandora's box that will open, and will he keep his word or will he start becoming anti-crypto as well? We don't know what the deep state or any of these guys have in their mind. So yeah, it is very uncertain. These are not people that you can predict that well, right? So the consensus is that there will be some type of a deleveraging event as we go closer to the elections. And we also see that even in stock side, markets have basically like plateaued, even though indices have marginally made a few local highs, local all-time highs, but not convincing behaviors across any of the global indices. So it seems BTC is all alone and crypto has been all alone and performing fantastically. But how long?
Yeah.
If interest rates keeps rising and so on. But if we get a December cut, then probably it's a nice thing, but we'll see.
We'll see. Yeah, we got some more information from a macro level coming out. We have JV noting here on YouTube, it feels like we hit a local top and a new bottom will be made. Maybe all these moves are coordinated. Yeah, JV, we'll have to see really how these moves shake up over the next couple of weeks. Ahmed, I want to ask you last question. You said you were definitely going to hit six figures by December 31st. You still confident that's going to happen?
Yep.
All right. I love to hear that come out. All right. So we got Bitcoin. We got more coming up, guys, in terms of looking at some tokens. We're going to be coming back and looking at Solana. We're going to look at Ethereum. We're going to have some questions about XRP. And I am going to be bringing up a brand new token somewhere, one that these guys haven't seen before. We're going to do a breakdown like we did for FTM last week, which did rather well. Before we do that, you guys have a really big announcement today, something very exciting for the market. I don't want to sugarcoat it. I don't want to give it any more. Benjamin or Ahmed, I'm not sure which one's the first to talk here. What exactly is the announcement? What does it mean for the market, for the listeners?
Benjamin, you have a go.
So a couple of weeks ago, we pushed out an on-chain version for JAI, where basically with just 3 clicks, anyone basically can create a decentralized wallet, account abstraction wallet on Ethereum, and basically deposit funds into that wallet and link it to a strategy which basically JAI operates. We called it as microcap strategy, and I think ETH price was somewhere around 2,500 at that point. And I remember a few users pinging and saying that why ETH, and then amongst them a few bought, and basically it resulted in a price rise afterwards. And a few good trades happened, and it was successful. Then we had demand for other chains. Now what we have finished is basically we have finished integrating Base and Solana. So the biggest challenge was not Base, it was Solana. Because the tooling almost did not exist. Nobody has done the decentralized way that we have done before. Everybody basically deploys a wallet and gives you a private key, which basically is a custodial approach and opens up to risk. But our system is quite solid. It's fully decentralized. Your wallets, your keys, and you're able to basically link it to multiple strategies that JAI operates. And so as a result,
Benjamin, let me break in here just for the audience to make sure we're getting really clear. So this is on-chain trading with J, no centralized exchange at all. All that risk is gone, right?
Yes, absolutely. That is the biggest advantage.
Right. Yeah, so I want to bring that up because I know a lot of you out there have been excited to hear about how you can use J. You've reached out to me, you've reached out to these guys. Hey, how can I start using J and get some of its amazing capabilities, its trillion data points, but they don't necessarily like the centralized exchange. We get it. We've all been around, many of us, some of us maybe even going back to Mt. Gox. Then we've had obviously FTX. All that risk is gone, and now you're trading. I mean, this is brand new frontier stuff.
Yes, absolutely. And another request that we kept on having is, microcap is great. It's a great starter, but some of us are late to the party and we want to allocate into Bitcoin, but we are scared about entering. Is there some models that you can deploy that can help us? And these are conservative, passive investing type of traders who basically are looking for an algorithmic model which can basically take up the effort of allocating and managing the Bitcoin exposure into that wallet. So we are deploying a strategy on Base primarily, which basically is a WBTC type of strategy. So what that model basically will do is it will look for very good buying the dip opportunities and capture the spot allocation, and then basically keep taking profit as price goes up. And it will do it in a very efficient way. Jay is very good at that. And for a long time, we have done, we use Jay for leverage. And this is the first time we are pushing it out for our users on the spot side, that too on chain. And Jay will basically allocate to buy CBBTC and WBTC. Those will be the two, assets, because for liquidity and optimization reasons, that is what you have on the Base side. And basically, the model has outdone even buy and hold returns during the bear market, so it's done quite well, fantastically. So we believe for those who want lower risk, just passively keep it. But the main point is in buy and hold, let's say you bought during the Luna crash, and then basically you had to hold up for nearly 50-60% drawdown, and then price came up after a year, right? This model basically minimizes drawdown. That is the key part. If the buy and hold drawdown is around 58%, the drawdown in this model is around 14%. So it optimizes the drawdown. The focus is on drawdown. Even if it underperforms the buy and hold for a while, it's not the problem. But it's about creating a safe approach for those who basically, need to park funds and just keep it compounding with a long-term perspective about holding Bitcoin. If you think that, okay, I want to grow my Bitcoin, I want to grow my USDC allocations to Bitcoin, I just want to leave it and just forget about it, because at no point will I have large drawdowns, so I don't need to worry about it. If you're that kind of a person, this strategy, this model, this approach is for you.
That's fantastic. So you've got a way in which you can manage. I mean, that's a question a lot of people have, right? Is sort of when is this market going to get overheated? When should I maybe take some profits, especially if I've held it for a long period of time? I know that's a question I get all the time. And that's a question I literally had that over Thanksgiving, say, hey, if you start talking about some sell-off, text me a message and let me know that the market's getting overheated. So everyone wants to know the same answer. Now you've got it, and you've got it from Jay. I keep on saying that because to me, it's one of the reasons I get so excited about these solutions is letting the robots do the work. Okay, so that's your Bitcoin solution, but I don't think that's it, right? Haven't you guys launched something else, or is that the start of it? We may have more to announce later.
Oh, there's a lot more coming, but we are going step by step. But the primary push, the biggest monster, the thing that kept Amit and Rishabh at night for weeks together was Solana. Because on the EVM side, at least you have a lot of better toolings. You have much smarter people. On Solana, it's all meme coins, right? And the people's IQ is also equivalent to that. So when you talk to builders also, it gets a little bit harder. So cracking Solana and doing it in a decentralized way, to do the 3-click approach, which is decentralized and self-custodial by the clients, and still we are able to link it with J and operate on top of it. That was a nightmare, but we got through. So over there also we have the BTC strategy. So you can push in USDC on Solana, and the bots will do the same. But there's also microcap strategy, which focuses on the meme ecosystem, and there's no other very good token on Solana. So basically it's all memes, right? So those are two strategies on Base and Solana that we're deploying on. ETH, we still have the microcap, which is still running, but given the gas fees, the activity is a bit muted, and the market has also been a bit muted on the meme coin side. So we're just waiting patiently for more trades. But yeah, Base on Solana, that's the big breakthrough right now.
So now if you hold 3 of the majors, right? If you've got Bitcoin, Ethereum, or Solana, you've got different strategies you can now deploy directly into Base. Why was it so important for you to develop this decentralized wallet solution? And we talked offline about, there's vaults that you could do on Enzyme or Morpho. There's other ways in which other people have approached it. Why was this so important to do it this way, this sort of 3-step approach, decentralized?
So the first reason was that the moment you go for vaults, your vault, even though it's just a smart contract vault, it is basically a honeypot, right? So if there is something that goes wrong, and let's say, whether the vault manager basically screwed up something or whatever happens, it affects all the users in the ecosystem, right? Because it's decentralized, sure, but vault exploitation is not new to the market. And even Morpho vaults that you speak of had an exploitation, and basically around 12 million or something got gobbled up by the hackers. And then basically you have to sit through the discussion routes with the hackers and negotiate and so on. So that additionally, when liquidity flows out of the vault, it basically impacts everyone who have invested into the vault. It impacts the NAV of every single investor, right? Because a good position basically can become a bad position when someone leaves money from the vault approach. So it affects everyone. But when you go on a decentralized approach, but still self-custodial in the way that we have done, wherein every individual is individual. Like you don't get affected because of someone else's activity. If someone sells, well, of course, the liquidity in the liquidity pool matters, but you are not affected because of some stupid activity one of the investors do, right? Because it's their wallet, they do whatever they want. Your wallet, you do whatever you want. And that is very powerful. And being able to, like deploy into a index type of a model, let's say Coinbase index, but what you do will not affect others. So that impacts a lot in the performance. It doesn't seem immediately significant, but over a period of time, it adds up. Multiples of percentages adds up. So Vault, this was one reason why we didn't go with vaults. And yeah, secondary, basically, like scalability. Vaults become a honeypot at one point. Like you cannot put in like $10 billion into it, but into our J.J Labs, like you can bring in 10 billion in funds into it and bring in 1 million users. The system will hold up.
That's really impressive. I think it's even hard to really understate this, the significance of what you guys have developed. I think it's a really exciting product to bring to market. As you said, it really doesn't have the risk, the honeypot risk that people are talking about, which is already available from a lot of these other solutions. And I think you see this all the time. People talk about launching new solutions. It's really just something with a new marketing campaign. This actually is different. So this actually is decentralized, which is interesting. How does this differ from, a lot of people hear AI agents. We have Jay that does a lot of this trading. And now we've got all this discussion that's happening around Truth Terminal, AIX BTC, AI16Z, et cetera. And I'm sure there's 10 more that came out today. How does someone think about the difference between what those are offering and what the solution that you're talking about is?
So the key difference is that when you take AI agents that you're seeing in Twitter, they operate based on nearly, like if you take AIXPT, which is one of the popular agents, it uses 265 influencers and data sources, basically CT influencers data, and it uses that as a mindshare approach in order to allocate, a supply or basically talk about a particular token and stuff like that. Now, what this means is that it can be fully gamified. If you're strong enough to populate the Twitter with bots which speak about a particular token, then the AI agent also ends up picking up, right? Because it thinks that's basically the mindshare. So you can trick it. This is always the problem with social data, and you cannot rely on it on a long-term basis. There's still a curated approach that is required. Right now, why you see a lot of success with those type of projects is because it is still a bull market, right? Basically, every shit was pumping. So you can name most of the tokens and everything was pumping, right? So you can pick and choose and the portfolio would still have performed well. The real hard part is to have data like what we have, to have data about liquidity pools, to have data about the holders, to have data about like top traders in each of the top tokens and how those holders behave. What if they were buying another new token? What if some of them were launching a new token, right? So a lot of those key informations basically get gobbled up by Jay. And this is something that we've been doing for a while already, right? The problem is we were trying to deploy a lot of that inference on the centralized side alone. And we are opening up the the tokens that basically now we are able to service, right? Because all of that information was there, and our system is basically different because it can also absorb time series data and operate based on that. If you take up simple LLM models, they don't basically operate based on time series data. They are natural languages, so they are just basically about grabbing in a data, and they will explain to you based on what they see in that. It's more instantaneous rather than something that you can backtest and say, okay, this is what it is able to do or not. It's an inference engine. So really, it's not an intelligence engine.
Right. So the intelligence side of it, being able to bring in the models and the signals, synthesize it in a way that can be really informative on how to trade rather than just taking a whole group of signals, like you said, that could come in from a social setting, be able to process that quickly and then make a determination of, oh, everyone's talking about it, so that let's do an allocation. That's kind of what AI 16Z is doing versus what Jay can do, which is really intelligent thinking about how to look at the risk reward.
What they're trying to build is an open source of tools of agents, which basically then becomes the base for other people to build for, let's say, for roasting or for chatting or for dating, whatever it is. It's an open purpose. Our focus has been, like Ben says all the time, you need to be hyper focused. So our hyper focus has always been one industry, which is trading and which is crypto. It's purely about trading crypto.
Yep.
It's about how can we build a super solid personalized finance, agent. Let's say you call Jay as an agent if you want. It's to make him as a super solid, hyper, personalized finance friend for you.
Yeah.
Sooner or soon, a lot of new things are coming. Like, just to keep your funds in J.J Labs, you get yields, and a lot more interesting stuff is coming up. And we're trying not to overshare.
Yeah. I was going to say, so the next question that anybody's listening to this is asking, okay, how do I get access to it? In the past, it's been a little bit gated. I think there's been a slow kind of rollout as you've gotten this up and running. Is this now available to the public? If someone's listening to this, can they sign up for this today? Is there still another period? Explain how that works.
They can sign up today. It's ready to go. Just go to j.jlabsdigital.com. Marconi will also put it out public. You can go sign up, start depositing, and everything else is automatically taken care of. You don't need to even ping us.
Yeah. I mean, I cannot overstate the importance of this development, specifically on the Solana side, because this is for so long, right? We always talked about my wallet, my tokens, my funds, but there was always an element of, all right, like you said, right, go in a vault or go and do a protocol or go to a centralized exchange. Having said that, right now, the whole thing changes. You park the fund, you collect the yields, or you take the trades, but nothing moves from your wallet. Everything is in your wallet, and that is fundamentally, that's the whole crypto was based on. So I think this is on Solana side. I'm really, really excited because we call it meme, but this is where most of the money is. So why not? And nobody else is offering this tooling what we are offering now.
And when we started actually going aggressive, like 6 months back on the Solana side, digging and trying, and we were actually building a few nodes, testing out a few nodes, and so on. One of the biggest problems that we used to face with other Telegram bots or sniping bots is that they basically generate a wallet and they give you a private key, which means they also hold your private key, right? Now, even a lot of my friends who are very good traders in the Memecoin side and deep in the trenches, they don't put a lot of money into those trading bots. They just use it as a hot wallet bot in order to trade and make money. But that is a risk, right? Because those bot platforms still have your private key. In our case, like, we can break down the platform however we want, but we can never access your private keys. There is no way for us to, because we don't build that. It's account abstraction. Like Ethereum has that. So that's why it gets really secure on the EVM side. On the Solana side, there is only one service provider who was able to basically do what remotely close to what we are able to do on Ethereum. And then basically, like, we were able to build a very similar approach on an abstraction level that basically, takes away any of the custodial layer with respect to building in Solana. In fact, we are first of a kind. Yeah. Nobody has done what we have done.
Yep. And this is all in service to the AI agents that will be coming up next. So there is a lot of activity that is going on the JAI side. So this is the all tooling that is going to come together. And now with Solana, it will open up a lot of floodgates. Basically, you will see the trades coming in, going out. And there is a lot of activity on Solana network. So we'll make use of that.
Exciting times. Okay, so if you're out there and you want to give this a go, I definitely we'll link it in the description. Share the website link. Yes, Yash, I will. I think I'll have to do that after the show. I want to make sure I get the right link for it. You've already got 3 strategies across 3 tokens. very exciting times. This is the lazy game. This is the way of being able to turn it on and kind of set it and forget it. This is kind of the start of that, which is kind of the dream for many people. For those who really want to understand what's going on for price movement, but don't necessarily have the confidence to be able to make the trades, this is going to be able to do that for you. And let's face it, when you got Jay, who's got trillions of data points and all the strategies that I have, most of the time it's going to beat you. Okay, guys, anything else you want to mention about this before we move on?
Mainly, I want to say don't stay on sidelines. Hop on here.
Oh yeah.
Like go on a minimum balance if you want to, but be here, because actually, if you're not, you're going to miss out something important.
Yeah, well, yeah, we definitely want. I mean, we're all here to make money. Let's be very clear what we're doing here, right? We're here to help you guys think about how you can trade. This is a product offering that allows you to do that. So I guess the last two questions would be, what's the minimum that someone would think about putting in? I don't want to say it's recommended or financial advice, but if they're looking to say, hey, are there any kind of minimum thresholds where the bot or Jay is going to be able to perform better? Are there any limits around that?
Well, on the BTC strategy side, since it's on base and primarily, the minimum balance recommendation is around 25K USDC. Do not deposit WBTC. Please look into depositing stablecoin over there, because that is the approach. You allocate stablecoin, then basically it is managed on the BTC side. Micro cap, you can choose base or Solana. It doesn't matter, but if it is base, please try to do at least 1 ETH, and Solana try to do at least 10 Sol. It's up to you what you decide after that.
Okay. And then from fees perspective, a lot of people are going to be asking that. What's the cost to them for using this service?
Well, we don't charge any outright fees. There's no subscription fee for this. Just deposit and just stick it up and go along. In fact, we've optimized a lot on fees compared to what you would pay when you are basically swapping on Uniswap. It would be much cheaper than swapping on Uniswap if you are actually deploying into this wallet. So we've optimized a lot over there.
All right, there you have it. I mean, there's literally no reason to wait for this. You should go explore it, look at how much you want to be able to allocate to something like this and see how it works within your portfolio. Again, I know I'm going to be doing it. I already have some over there. I'm happy with starting that. And I'm going to be looking to add more. And we're going to be looking to share some of the performance as we continue to go through the bull cycle. And we can show you how this is going. But I mean, I think to the point Benjamin Alman are making, they said this over a month and a half ago. This is not the time to be sitting on the sidelines. This is the time to be in the market, so that you can be getting those upside gains. And this could be a good time to be looking at a solution like this. We'll be sharing the link afterwards. And as part of the launch, we'll do it both on YouTube, on Twitter. So definitely, if you haven't subscribed already, I would subscribe to the Exchanging Good channel that we have on Twitter, as well as if you're on YouTube, we'll put it out there as well on our YouTube channel. All right, guys. Enough of the product launch, which is amazing. Let's get back into the action. We got a couple of tokens we got to get to. Okay, let's start. Ahmed, I want to come back to you. We just went through Bitcoin, kind of what it might look like over the next week, seeing if it may go down below the 90K range. If it is, you got some stink bids ready to launch in the 86. I think the 86 to 87 range, maybe a little bit below
86 to 82 range, or 83, okay. 86 to 83. That's where my stink bids are. And yeah, I mean, as you can see on the chart, Monday low is recovered. Basically, that was a liquidity. This is a standard play that we see over and over again, and we see every week. So it makes a Monday high, Tuesday it recovers, and this is if specifically Monday high is in, and yeah, when the Monday low is recovered, I would basically, if I go on a 4-hour chart and at the close of this candle, right, if this stays like this, I'll take a trade from the trade would be basically take a trade from the angle. Basically 3% you can take, or this is the range I would take the trade on. So this is a 3% range, you can take the trade, put an expo of 1.07. Yeah, if it fills 50% of the balance, let it run, because then you have another 50% to deploy if it really breaks down from this point on. Looking at it the way it is moving, yeah, Monday low is tested, and there is clearly a lot of demand here. It might go up.
Okay. Excellent. All right. Well, let's move on to some other tokens because I know a lot of people aren't just trading Bitcoin. What are we looking at from, let's say,
ETH.
Ethereum? Yeah, let's look at ETH, which has showed some strength as of late.
Oh yeah, I mean, since last 3-4 months, that's what I've been harping on about. Since it was at 2400, saying when ETH will move, it will move very fast, and that's what has happened. Now, I mean, this is the range or basically moving upward channel I've been basically taking the trades on, and this has been very profitable. It's basically 6 to 7% range. So again, ETH, same setup. Monday low has been tested, cleared. Again, moving up channel has been tested, that has been cleared. If the next 4-hour candle, the way it has been running, right? If this clears up, I'll take a trade again, all the way down to this level. So from here, so that's another 3% range you can take, or 3.
So what are those? Sorry, what are those price targets you're looking at?
38.50.
Well, no, I mean for layering, for laddering down. What are the entry points?
3600 to basically you can go about 3600 to 3450.
Okay.
So you can ladder down that range. If you have exponential setup, do an exponential setup of 1.05, 1.07. So your risk will be around this point. And then if it breaks down, at no point Ethereum would break 3400. I'm sure of that. It's been tested multiple times. Coming up as well, it was tested multiple times. We knew these targets, the moment it will go up 3400, we knew it's going to hit 3600. The minute it will go above 3600, it will go 3750. And now, if it stays like this, 3850 is the next target. So it's moving in good cycles.
Love it, love it. All right, so we got Bitcoin down, we got Ethereum down. Next, we got Solana. I think last week we talked about. Benjamin shared sort of a strategy where you could do 3 different price points. I think I want to say it was 220, 200, 180. It's kind of set and forget it. We were talking about a couple different more weekly trades. What are you looking at here? Is this kind of hands off, or do you see something that's kind of piqued your interest?
So I think Solana is starting to move. So you can see another ecosystem, Solana related ecosystem like Popcat, VIF. These tokens have started to move now. I mean, Popcat specifically, it's been down for last 3 weeks, and it has down 40-50%. Now this week, since yesterday, it started to move in positive territory. So it's moving 5 to 6% a day. So that is an indication that money is rotating back into Solana. And this is what I was been targeting this area for. This is a 3-day range. This is where the market structure broke. And from that point onwards to the top, this was the range where I would have taken big money in. So 222 to 212. This is what we talked about last time when the market was somewhere here last week. Oh, sorry. This is 12-hour range. Yeah. This is where we were talking last week on Tuesday. So we were saying if this comes, this is a good trade to have. And yeah, this is where we got filled. So this was your where fair value gaps were there as well. So it got filled. And I hope from here it will go to at least 260.
So you're expecting some positive price movement, looking at some of the meme coins on Solana starting to get a little bit of a pickup, like Popcat.
Yep.
Okay. All right. Well, that's a pretty good trade from 220 all the way to 260.
Yep.
Okay. So we've got Bitcoin down, we've got Ethereum down. Ethereum and Solana both have really good setups right now. Is there anything else that's on your radar before I bring up sort of the mystery token that I'm going to throw at you guys to see?
If it is XRP, I'm sharing the chart on XRP.
Well, yeah. So first we got thank you for bringing that up. I've lost my head looking at all this good news, and all I'm thinking about is Jay trading for me. Walk through XRP. Is XRP still a trade or not?
XRP is a trade only, I mean, once this initial euphoria settles down. So going forward, right, this is a weekly chart that we are looking at. So if it doesn't fall below $2, then you have a run at your hand. So basically, at least it will go. Then it is in price discovery mode. So this is a pent up kind of a rubber band effect that is coming into play on XRP. So it will move, but it should not go below $2. If it goes below $2, then everybody's going to sell their bags and run, because that's what happened last time. And the moment it went above, this is what happened last time. So it went above 2, everybody sold straight back down. So if it doesn't go below 2 and if it can hold up above 2, this is the entry point, 196 and 2. So it will run. I mean, it's in price discovery mode. At least 350 is my target.
So a retest of the $2 kind of area. If it holds that, then looking for it to get all the way perhaps up to 350, probably not being that greedy, maybe take some profits along the way.
Exactly.
You're saying the XRP Army may not have diamond hands?
I think XRP Army is the only army that has diamond hands.
Well, you're still holding on to it. You gave up a marriage over holding on to XRP for 4 years.
See, I didn't sell.
He is a part of that XRP Army.
That's right. Yeah. I've seen the tattoo.
Yeah, I haven't sold it yet. I was thinking when you asked the question, right, what is happening to XRP, I'd start looking at the chart.
Let's sell it at $10, Amit.
Yeah, there we go. There we go.
350 is my target. I'm going to sell it 350.
Oh boy, he's finally getting out. He's going to retire as a colonel in the XRP Army and move on. All right, so there you have. You still have a play on XRP. A lot of interesting sentiment. We'll see if the XRP people continue to have diamond hands, or they're going to dump it under 2.
Yeah.
All right, I've got a token here. This is the mystery token. Unless there's something else you guys wanted to raise.
No, let's go.
I'm looking at this the recent screener. And let me see what I got here. Hold on, it just came out. I was looking at, well, FTM is back on here. We've got Ruin, HBAR. We've got a bunch on here, guys. Oh, but I think we may have another Dino that I want you guys. Actually, I may give you 2. Neo. I think this is the Korean, I want to say L1.
Korean Ethereum, they call it as.
It's the Korean Ethereum, yes. So this came up as strong bullish on the screener. I want to see. Do you guys see a trade here or not?
Well, definitely.
You will be able to buy back at 12. You should be able to buy back at 12.
Definitely, there is a trade. So if the way I would go about this is right. This is where it is breaking out of the range. So you can let it back down. So this is a weekly chart. And the next target would be this. Simple as that.
So I'm looking here. You've got some. So it's currently sitting at 18,773. What are you laddering down to? Just to share
20%,
that.
Minimum 20%.
12.
All the way down to $12.
You can ladder down till 12. Yeah.
Oh, really? 50%?
Yeah. Yeah, look at its history. It's really capable of doing it. It's an illiquid token, Amit.
Yeah, that's
really
true.
Retrace.
That's true.
Very illiquid. But let's just use the fib levels, let it drop, and just buy it, and you'll still get it.
Well,
I mean, it's not something that I would bother to allocate funds on, to be honest. There's definitely a trade. Probably I'll put like 0.5% of my wallet and like my trading wallet and deploy it and just scalp it and use that to go and buy some groceries. That's as far as it goes. It's not a serious token that I would.
Yeah,
is that the gold-plated coffee or the gold-plated ice cream? Is that the kind of groceries you're going to be buying after Neo?
I'm never doing that again. I will never forgive myself for buying that gold coffee shit.
Boy.
Every time I think of it, I'm like, I should have bought more Mudeng or Giko
that's right.
instead. That's what I feel.
I don't want you to have that feeling. So
yeah.
I do on a serious note though, I want to get your guys' thoughts here because you are going to see in this market, if you're just looking at the top level, a lot of these tokens, just like Neo, that are starting to explode. You just mentioned it's a liquid token. It probably doesn't have any activity. What's the risk profile that people should be considering for this, right?
I mean, as Benjamin said, you should not be allocating bigger balances to this. This is one of those things that if it runs, you have good percentages on your hand. But if it doesn't run, you should not be worried about that trade. It should be something like you deploy in 2030. That's why he said, right, if you go from here, deploy it in at least to 30% range, and you won't be basically regretting that trade. Because if it goes down and pumps up, we got 50-60%.
Yeah, it will definitely pump up. If it goes down 30% after such a run, it will definitely do a pullback. So worst case scenario, you'll still be able to exit at profit. But if you ape in over here, putting in like 10% of your wallet balance, then you're, like, okay, good luck.
Well, and I'm worried for people being able to exit the pump. Right. That, I mean, with thin liquidity,
okay,
granted, if you've got a smaller
is,
balance you're using, but with thin liquidity, sometimes it's hard to get out.
This token has consolidated below 30 since 2022. So it's been around like 3 full years that this token has been below 30, okay, and traded between 8 and 30. And it has been compressing, basically, right? And it has been doing higher lows and lower highs. So if you think of it, it's like a triangular pattern. And when it breaks out of it, you can basically see it do like a LTC or XRP. It will do. It will probably, if it breaks out of 30, it is definitely going to like 70 or 80. But the question is this 2x or 3x over here in this token worth it for you to sit and focus on it just because it hopped out a screener, like suddenly out of 52 weeks, it hopped on the screener bullishness for like 2 days? So that is the question, because you still have much more liquid tokens. You still have tokens or chains which have utility. Like take Chainlink, for example, right? It did fantastically well this week. We basically had a lot of our stuff running over there in Chainlink. And I think yesterday alone, it pumped up 36%. And it is breaking out of the 2024 high around $21. Now, its all-time high was 50. And Chainlink is, as an Oracle service provider, it has always had usage. It always has revenue. It has always done well. Now, that has gotten dampened down for quite some time, for nearly 2 years. Same like what happened to Neo, right? So you have a same price action profile when you take Neo and Chainlink. But Neo doesn't have much of usage, be it Korean or not. But Chainlink does. It is still the backbone of most of the EVM protocols. In fact, like it even powers Binance partially. So you still have a better bet with Link rather than going with Neo. So if you want to gamble, just take more risk on Link than Neo. Like this entire year, we used to cover about Neo quite a lot. About Link quite a lot, because I solidly believe that it is a worthy project, and it is a token probably, if the bull market continues, if insane alt season continues, it probably goes to 100. Makes a new all-time high and goes to 100. So to me, I would rather make a bet on this breakout about 25 on Chainlink rather than focusing on Neo.
Yep.
All right. Well, I master thesis on how to think about token allocation. If everything's going to be going up, thinking about the ones that are actually stronger, have a better thesis, actually have revenue, as you just pointed out for Link, actually have utility versus those. It's one thing if it's just a meme coin, which you can think of as a community token, versus actually saying that you're going to have some kind of utility and then no one actually using it. I have one last one here. We have from the audience. The Bauer ETH says Ave's looking good. I want to get your guys' take, and then we're going to wrap up this part and go on to Ben Lilly. You guys have a
Ave is
thought
definitely
on?
Looking good.
Oh, Ave is looking solid.
All right. So what's the trade there for Ave? What's it looking like?
Ladder down till 150 and just hope that it does a pullback quick for you. Because it is about to
150 is way too
low. I know, but you can do a batch till 200 and then you can do another batch lower. Because see, the thing is, it is about to snipe up the liquidity about 240 area, which was creating the top before Luna crash in 2022. So it is almost at the same spot as that, like around 2 years later, 2.5, 3 years later now. So there is a liquidity zone over there, in my opinion. And that is a tricky zone. If it does break out beyond weekly, it probably does a good run. But if you want to really risk it, do really solid sizes, 175 to 220 would be a zone that you can hope for a pullback. But keep a leg inside if that is the case. Keep a leg inside by, like, if let's say you were thinking of allocating $1,000 into Aave, buy like $100 right now, and then leave the $900 to ladders.
Yep.
That's how I would go about it.
Yeah, I would go from Monday mid to previous quarter high. So that's
Yeah,
basically
that's a local trade. That's a local trade, agreed.
Yeah.
But I'm thinking about like if Aave is going to pull 1,000, because it is still part of a lot of the DeFi Renaissance thesis, and it did a very different type of accumulation in the past 3 years. Almost every other token did a horizontal accumulation. Aave did a curved balance accumulation, meaning it did not. It create like a like curved pattern if you look at the weekly. So it had a lot of buying. It had like buyers come in and accumulate in a 50% range at the bottom. So we have left that entire range and come out, right? So that is why it may be even difficult to go and test that 175 range. So 175 to 220 is probably the range that you can hope it will fill for, and keep a small leg inside over here, even though you have high chances of going into underwater short term. So that is how I would pay over it, because the bet is still that this is not the top of the cycle for Aave, because the actual Renaissance thesis that all these guys are pushing, it has not started playing out yet. So when that starts playing out, when they do the revenue switches and fee switches and so on, this basically shoots up. For example, today the yields are basically for USDC and USDT is 30%. So Aave definitely is doing well as a project as well.
Right. Yeah. Well, and that's a little bit of what you were talking about before. I know that was perhaps more centralized, where you're talking about the exchange and prime brokers offering some of that yield, but it shows a lot of this leverage coming in. And we're at some point we're going to see a blow off top. I'm going to guess if the leverage really starts to come in. The leverage, it just depends on how much leverage comes in, to where it's a masterful type of explosion, or if it's a slower deleveraging event. Okay.
Yeah, we don't know that yet. It could basically come at 600 or 700 as well, and then everything just drops down to 300, and then basically runs up to 1,000. It's possible. We don't know that, but definitely a lot of liquid investing funds are basically going into it, because they think they can basically get the protocols to do the fee switch once Trump comes in. So yeah, DeFi is a interesting bet actually.
Well, we're going to have to get more into that. But for this week, guys, we've been through Bitcoin, we've been through Ethereum, we've been through Solana, XRP. We looked at Neo, we looked at Aave. We got plenty of trades. You don't want too many, otherwise you're going to get lost in trying to manage all the liquidity, all your ladders down. Of course, you could use Panda. That's going to help out with all that. We'll have to talk about that. We can't be talking about every single product on every show. We'll have to bring that back next week. Benjamin, Amit, I want to thank you guys both for showing up to the trading pit and dropping all the alpha. For all those who are out there, we will be putting in the link for JLab, so you can start trading that. Definitely go check that out today, even if you're saying, hey, I'm on the fence, and be able to deploy some capital. Learn how it works. See the interface. I think you'll be surprised at how elegant it is and how easy it is to use. Consider it lazy trade and lazy risk management, because you don't have to think about it. But guys, I want to thank you so much. Anything else you guys want to share before we transition to Ben Lilly?
Not really. But one thing for sure, again, underscoring that, don't be on the sidelines now. Now is not the time.
Yeah. No, that was about a year ago. And even then it was time to be moving in. No, it's really good sign. Do not be on the sidelines right now. You'll be kicking yourself.
Yep.
All right, guys. Well, thank you so much. And definitely for all those out there, I would suggest you continue to listen. Ben's going to do a masterclass and everything through supply and demand for some of these networks, which can really indicate where the market is going to go next. You're going to want to hear what he says. But definitely, you can hear more from Benjamin Ami. You can follow them on X. And definitely next week, we'll be bringing them back, talking more about some of these numbers. All right, thanks, guys. Let's take a look at the markets while we transition over the conversation with Ben. Oh, Ben's already here. I was going to take a look at the markets. Okay. A little bit of a mixed bag. The majors, Ethereum, Solana, XRP, all looking like they're having a bit of a recovery period. We see a lot of green on the smaller caps. Not sure there's a whole lot to share there. Cardano kind of flat. I hear there's some big news coming for Cardano. I think they've integrated with some of the Bitcoin layer 2 solutions. Interested to see where that goes. I know Charles Hoskinson has kind of transitioned from being kind of a net bear on Bitcoin back to kind of a net bull. So interesting story there. But Ben, let's bring you up here. How you doing today?
Good. How are you?
I'm I'm super excited that these products just launched. Been hearing about it, and on the other chat areas where we talk about it in Discord, to actually see it out in the wild. Super exciting times, and just to be around in the market. I mean, we've been talking about these markets for a year and a half. Finally, see all this stuff come to fruition. It's just exciting.
It's fun to see. There's been so much time spent just analyzing data, creating these pipelines for the data, creating metrics off of it, trying to source alpha for autonomous AI trading software. And now just having the analytics platform starting to come out, having the kind of app solution with JAI on chain coming out and being self-custody and solving the problems that we had, in prior years when we try to roll out a solution on chain. It is exciting, and I'm excited to hear everybody's feedback, hear how we can improve it. We just have so much data that we can provide, and we just don't want to essentially overwhelm everybody. And we try to make it bite-sized, but it's always harder said than actually done.
It is, yeah. Well, I know, because you and I talk about it offline. We talk about it live on these shows. There's a lot of information, a lot of great data, and it can be confusing for some people. But let's transition and talk a little bit about the state of the networks. Last week, we talked about Bitcoin. We talked about Ethereum. Where do you want to start today? This is kind of your element of the show that you really kind of drive, more of an education, longer term view that I think is really going to be impactful, particularly as we go through the rest of this bull cycle and people are asking, where is the activity going to run?
Yeah. So it's almost like feeling like more of a flow report as kind of we continue down this path here, because a lot of the time I'm just kind of tracking where tokens have gone, and really, how is that flow kind of creating fees showing up on these layer ones. In particular, I'm looking at Bitcoin, Solana, and Ethereum today, and I'll try to make it much more brief this time around than last time around, because I think we were talking for about an hour, but I don't think we need to get into that much detail. I'm really only looking at one protocol specific today as we start to drive through these layer ones, but we'll get started here with Bitcoin. So to start off, I mean, one of the first things I like to look at are really just fees of the network. And so looking at these fees, you can look at when there are these kind of peaks and valleys, and then trying to understand, what other activity is taking place on that network that is driving those peaks and valleys. And so here we have, Data Always, by the way, congrats on your grant that you received recently. His dashboard here on Dune, he lays out transaction fees on Bitcoin network, Satoshis per virtual byte here, which you can see these peaks taking place here. This is in October. And then you kind of see this sustained rise taking place of late. And when we go ahead and we actually look at these numbers, what's interesting to note is that a lot of the inflows that are realized on these ETFs, they coincide with when we see some of these peaks take place. So I'm just using, this basic table from Farside Investors. You can go ahead and you can see the red here showing up in early October, and it kind of goes away around the 11th here. And then we have kind of sustained flows taking place around that time period. A lot of activity, a lot of excitement, a lot of people maybe accumulating Bitcoin on centralized exchanges and moving it and transferring it to their own cold storage wallets or even kind of hot wallets. And so we kind of go back to this fee chart, and you kind of see early October, fees are pretty low. And then right around the 10th, the 11th, everything starts to pick up. And then kind of same thing, we had the kind of presidential election take place in the US in early November. A lot of activity, a lot of positive flows took place on the heels of that. And that has driven a lot of the fees that are being realized within the Bitcoin network. So really that is the pulse right now when it comes to Bitcoin. But I still would like to look at some of the supply, because, outside of this ETF narrative, what is there taking place with the Bitcoin network to get us excited? We know that a lot of projects, and it's really exciting to see them bring DeFi to Bitcoin. And one of the earlier projects, which is kind of comparable to what EigenLayer is doing on Ethereum, is Babylon. And Babylon has a lot of projects that are building on top of them. And in particular, when we look at, how all this Bitcoin is getting staked, when it involves Babylon and also Symbiotic to a lesser extent, there's a project called Lombard that has the LBTC token, and that has garnered essentially the most amount of liquid restaking token TVL to date. And we see there's over 10,000 Bitcoin on that network. So I went ahead and I kind of checked it out to see what was going on there. And so for those that aren't familiar with kind of what EigenLayer does, for example, is they allow restaking. And so, staking Ethereum on the Ethereum network, you go ahead and to do that to provide, validation services and security for the overall network. And so why would you want to restake tokens on top of that is to basically provide those security guarantees to services that you want to provide to the marketplace, where if you decide that, I'm not going to really provide these services all the time, then you get penalized for those actions and you can get slashed. And so really you putting your stake, your capital up is like sort of like your ante, if you will, into the pot, that if you fail to execute what you say that you're going to execute, well, then you're going to lose some of that capital. And so that's kind of what's going on there with these active validation services. And these services can be really anything. I like to think of them more of like kind of B2B, kind of AWS type of solutions. But here jump in, Marconi.
Yeah. So how do you think about the value of sort of these various protocols, if that's the right characterization of them, bringing back to Bitcoin, bringing back to the ecosystem? Because I know you talk about sort of the various ways in which money moves, so this M0 to M3 kind of model, and what that can mean from a supply perspective. How do you see the value of, Bitcoin and the movement going into like a Lombard versus perhaps some other protocols? How would that, kind of fit in your model for the value it's bringing back to the network?
Sure. I mean, the kind of the simple way you can think of it is, you have a currency, you have dollars, you have something. Like if you're going to use it for payment, that's great, right? That's a use case for that currency. But then once you start to use it in different ways, right, you're kind of increasing the complexity of that currency. And you can go past payments, and now you can kind of go into savings accounts. And then once you go into savings accounts, that can maybe move to a down payment for a loan, right? So it's sort of acting as collateral to go ahead and borrow capital. So now you essentially have these functioning credit markets that take place. And then you have a lot of debt issuance that takes place. And then not only that, you essentially have a nation state perhaps that's backing it when it comes to the dollar. So at each level, we kind of see that the usage of the currency kind of gets more complex. Mm-hmm. And it also means that the liquidity, right, that payment, everyday goods and services is very liquid, right? And then when you move down into, say, more like 2-year, 30-year debt instruments, that money is not as liquid. And for that reason, that creates a little bit of a stickiness to the currency that creates these, they're called velocity or sinkholes, inflationary sinkholes. But really at the end of the day, it creates these credit and money markets that add value to that payment network. And when we see Bitcoin, for instance, its predominant usage has been really moving into an ETF and then kind of sitting in a wallet. Unfortunate but that's the reality. And we kind of look at how supply has sat in a wallet by looking at the last time it's moved. So we kind of see the behavioral attributes that exist when it comes to how Bitcoin is sitting in a wallet. And that's really the extent of on-chain analysis that has existed to date. But as we're moving into these layer 2 networks that are trying to absorb Bitcoin and create sort of this DeFi layer that exists, that leverages this pristine collateral, Bitcoin, we're seeing Bitcoin move and kind of evolve into these greater forms of, token usage, on-chain usage. And so we can track that. And what's really nice is once you start to track that, is you can kind of see like, okay, does this protocol have traction? Is there something behind it? Because now we're tracking the flows in order to understand, where are people going with their capital? How many people are actually depositing that capital? what are they doing over there? Is there something that we should be aware of because it's starting to gain traction? And that's what I really like. I mean, we've been tracking wallets. We've been tracking on-chain data since 2018. I think before wallet labeling actually gained popularity in 2020 and 2021. We were doing copy trading on Bitcoin wallets with JAI. So we've seen it evolved, and it's incredibly exciting to see a lot of these on-chain data and toolings becoming more popular, and especially with Dune in particular. And we even supply it on Panda as well. But here on this chart is what I was trying to show is just here we have LBDC absorbing a lot of Bitcoin. And so if we were to just track that, because this is again more usage taking place with Bitcoin, right? It's kind of becoming a little bit less liquid. It's not just sitting in a wallet. So what's going on over there, right? And just exploring that can help us understand, does this have traction, right? Is this something that's going to have momentum that's going to maybe move Bitcoin from more liquid to more illiquid state, right? And create this sort of supply shock setup. And unfortunately, I'll kind of start it off with that. Lombard is really just a way to use kind of DeFi tooling. And I say unfortunate because this happened on Ethereum. We had EigenLayer show up, then we had all this liquid restaking token, and all of the points started to being dropped from the sky. And then basically after March and April, and I think to a lesser extent, I believe it was in June, if you go ahead and you pull up a price chart, you'll see a lot of correlation here, is once those point programs kind of ended, right, all of that kind of mercenary capital went along with it. So there wasn't a stickiness that created the momentum around all of this tooling that, it's going to be a long-term trend. And so when it comes to what I see being built on top of Babylon, and in particular here, I was looking at Lombard, I don't see much outside of the points program taking place. And the way that I was trying to approach it is, if I want to go ahead and leverage all of this Bitcoin that's getting essentially staked over here, like what would I use, right? If I'm in seek of this service that's supposedly being offered, what do I do? And I can't find it, right? So just like right off the bat, like who are your customers that are going to be paying this yield outside of these points? And I don't see anything yet. And perhaps I'm just at the wrong website, or I'm just looking through the docs in the wrong way, but I don't see it at the moment. And I think, let's see, I'm not sharing the right tab here, but here's Lombard. You can go through the docs and you kind of see that it's positioning itself similar to a lot of the protocols being built on top of EigenLayer. But when you actually open it up, you can see that you can look at the dashboard, you can look at all these different vaults to go ahead and earn various types of yields and points. And that's it. I don't see a way to go ahead and subscribe to some sort of service that's being offered and then go ahead and make payment for that service that acts as yield for everybody that's, providing their capital for that network. So I don't see this having legs at the moment, unfortunately. But what I found really interesting as I kept looking into, because again, this is all points program, and we saw this play out to a large extent with Pendle when it came to Ethereum, and we see it actually taking place again with
Ben. Yeah, Ben, I just want to re-highlight, because I know we talked about that last week, but for those who weren't able to listen to that show, can you just describe very quickly, we don't even have to look at the chart, what happened once Pendle's points kind of ran out?
Yeah, so a lot of Ethereum moved from a highly illiquid state because it was being dropped into Pendle to go ahead and earn these points essentially on leverage. And once those points programs expired, and actually it was like just a day or two before each time, you saw the market respond, and you would have sell-offs on ETH because individuals were essentially harvesting their yield that they earned during that time period. And that right there kind of highlights what happens when you see a lot of supply move from a very illiquid state to a very liquid state. Like if we kind of think of it behaviorally, why are you doing that? Why would you move your assets from this illiquid state to a liquid state? Well, on the surface, you're more likely to kind of get rid of that asset. And that's why we track, the state of liquidity, if you will, of supply. In
so
that capacity.
It's a little bit of a canary in the coal mine for Lombard and what you're looking at here, right? That once these programs are exhausted, you could see some significant sell-off from whatever is in those, whatever's been deposited.
Yeah, so we can look at Pendle to kind of help us with these dates, because a lot of times these protocols will try to match up their points programs and seasons and try to pair it up with the offering that sits on Pendle. And pulling it up, you can kind of see, how much liquidity. I think, let's see, it's about $500 million sitting in Pendle. Just kind of glossing over these numbers and trying to approximate it. But you can see you got 22 days till a few of these expire. 128 million here, 129 million over here, 150 million. So these aren't small numbers per se, but this is mercenary capital. This is capital that is willing to move. So it's a very specific set, right? Like, we're not looking at Bitcoin that hasn't moved in 2 or 3 years. This is Bitcoin that's being willing to move, 1 month, 3 month, kind of more of an active individual on the chain. So these 22 days, it's going to be interesting to see what happens at the end of the year here. But what I wanted to also point out is, as I was trying to figure out where all this LBTC, man, that's a mouthful. Almost saying some other acronym there, but you got this implied yield here, which a lot of this is kind of a secondary market that's driving what people's expectation of what these points are going to yield. Right. So this is the expectation right now is about 8%, 7%, 6%. But the biggest one here that kind of caught my eye and attention here is almost at 11%. And you can kind of see the common denominator here with the ones that have this highest implied yield, which would just be the market's expectation of who's going to provide the most points and kind of what is the most kind of bullish sentiment, if you will, around something being launched. And this is corn. And it's usecorn.com, I believe, is their website. And kind of tracking that down, it's a little bit of a throwback type of 1980s type of feel to it. Backed by Polychain, Binance Labs, and a couple other individuals. There's a couple of exchanges that are behind them. So that's something to note there, which that might indicate future listings, future liquidity, which is a good thing. But if there's that much attention and bullish sentiment behind it, I was like, okay, maybe this has something that might be interesting to track down. And, looking at how much absorption of capital has taken place, which is what you can see there's various different types of collateral showing up over there. That's good diversity over there. Unfortunately, it's going to fragment some of the liquidity. I don't know quite yet how important that's going to be to the markets over there, but this is what caught my eye here. Like, okay, so people are depositing capital. There must be something taking place over there. So I go ahead and I look at how many transactions are happening, and it's just like nothing to get too excited about yet. Like, there's hardly any fees taking place. And what was interesting is they have a native gas token, BTCN, and it's backed 1-to-1 with Bitcoin. So the fact that it actually is trying to capture, some of the transaction fees in this native currency, I thought was really promising. Unfortunately, there's just not a lot in terms of adding up in terms of those fees. There's just not a lot of transactions. There's not a lot of users. New accounts, you can see single digits each day for people showing up over there and making accounts. So, the amount of people there are not a lot, but it's probably a lot of Bitcoin per individual, which would indicate likely some of the investors and backers of the project to me. So Again, a bit of a dead end here. I was hoping to find something by tracking some of these tokens on chain that would be, hey, like, let's check this out. This is exciting. Look at this new use case. But I kind of came up empty-handed, which kind of brings us back to kind of how we started this discussion on Bitcoin, which was just continue to track these ETF flows, because as we look at fees, like, this is the main driver of kind of what is creating this accrual value to the network.
Okay. So hopefully we start to see a little bit more, some additional use cases that go beyond what we're seeing with Lombard, go beyond what we're seeing with used corn, which actually generates some activity and become longer term lockers of Satoshis, right? That's really what you're kind of looking for.
Yeah, someone's gonna hit it, right?
Mm-hmm.
Like, there's a lot of projects, a lot of groups that are building all this tooling. They're securing a lot of, Bitcoin onto their networks. Like, they're getting that first phase kind of completed. That's hard,
Mm-hmm.
right? Everybody listening here, like, you start a project, go ahead and try to attract capital. It is not easy.
Yeah.
Right. So the fact that they're able to do that, it's really promising. And so it's more of just like a hope that, like, hey, there might be something here that's exciting, something to try. And I haven't quite found it just yet. Maybe next week I'll find something different as we explore some of the other ones that are kind of absorbing some of the supply. But, it's somebody's going to hit it. And when they do, that's, you're going to have to hold on with both hands as it runs.
Exciting times. Yeah. Okay, so there we have it from a Bitcoin perspective, from a flow report type of view. Do we have time today to go over Ethereum and Solana, or one or the other?
Yeah, let me do Solana real quick, because I didn't hit on that last week, and I'll try to make that one brief. And then I was gonna kind of dovetail into Ethereum here, but to kind of get on to what's going on with Solana, I mean, a lot of the activity had to do with, let's not beat around the bush here, but a lot of meme coin action.
Mm-hmm.
And Pump That Fund was really getting everybody's attention for a period. And then they kind of went a little bit too far, right? Things got a little out of control. All right. And
it's a nice way to phrase it. Yeah.
And we're just like, we need to, like, tamp this down. Okay. Like, we just got, President-elect Donald Trump that's pro-crypto and announcing all these very pro-crypto individuals into all the kind of his cabinet members and various positions within the administration. And everything's looking great, right? Even like Gary Gensler decides, I'm going to step down. And we had the other kind of Democrat that, was kind of anti-crypto within the commission there. They had to step down for personal reasons. And so it was like, oh man, like, everything's kind of going our way. And then you have Pump That Fund say, you know what, I'm just going to take this to the max. Okay, like, this is crazy. Like, nothing can go wrong. It's like, okay, you guys just went a little too far. Like, let's ramp down the excitement here. Everyone's kind of calling like, hey, people's lives are in danger. And they cut off the live stream. And activity has taken a hit since then. And we could see that right here, like the amount of tokens being launched.
There we go. Okay. I was going to say, we got to have something on the screen. Yep.
So you kind of see it's starting to dip. A lot of these metrics are starting to dip a little bit over the past couple weeks. You kind of see it peaked out on the 20th over here, and the 21st was kind of when things were getting a little too much. And since then, everything's pulling back a little bit. And as we pull up kind of the fee charts, you kind of see the similar thing, right around the 20th, 19th, 20th, 21st, which is when the amount of tokens that were being created per day really started to ramp down. You saw fees starting to come back down as well. Sort of the old saying, if you will, is if, you want to supply the picks and the shovels for everybody that's trying to go and explore and find gold. Well, for everybody that's trying to find the next meme coin, you want to be the supplier of all the tools and the infrastructure for everybody that's trying to go ahead and kind of gamble on those tokens. And as we see the amount of tokens, or really activity, which is launching these tokens, start to subside, right? That's sort of that revenue stream for all these picks and axes starting to come back down on that network. All right, so those are the demand drivers that are starting to come down. You see fees starting to come down. And so when we take that in consideration and we pull up, because I know like just Solana and ETH, these groups just, they're maxis, they just have this constant battle going on. I don't know if they just want to really take all the mind share in crypto and just that way like Avalanche has a hard time trying to get their voice in, and Andre over at Phantom's having a hard time. Like, is that the strategy? I'm not sure, and I'm not here to really pick a side one way or the other. We're just trying to figure out what people like and offer services. But regardless, you pull up this ETH Solana chart. All right, I know this is triggering. That's why I gave that whole context.
Are we looking at this the same one? Are we looking?
You are not, but now you are.
There we go. Okay.
Thanks for that. But yeah, a disclaimer here, this might trigger some people. But if you go ahead and you look at those days, the 20th and the 21st of November, right, when everything kind of got a little too out of control here, like you have a bit of reversal taking place on this chart, right? And it went ahead and just blew past this prior trading range between the two, and it's getting ready to try to reclaim this area up ahead. Right, so that's kind of this turning point that just took place, and we really do need to take note of it because you kind of see this also coinciding with a lot of the ETF flows on ETH, but we'll get into kind of some of those fees in a second. What I'm really getting into is sort of tracking the flows, which is over here, because the stat that a lot of individuals like to bring up is, oh my God, there's all these outflows taking place on Ethereum over the last week. Okay, yeah, it is, right? But what was kind of the mentality that Ethereum had a couple of years ago? It was to move, activity and a lot of the development onto these L2s. And when you add up how much inflows Arbitrum, Base, Starknet, and OP Mainnet are accumulating, you see there's a lot. It's more than the outflows being experienced by Ethereum. So there's actually like a positive net flow taking place within the Ethereum ecosystem. And then when you go on to Base and you go on to Arbitrum, I find it really interesting, which is just the amount of activity is just blowing up in these little corners.
So is this really, I mean, we've talked about this before, but Ethereum in some ways has been a victim of its own success. I mean, it has a strategy to move the activity off to the L2s. Then people are complaining there's not a lot of demand on the L1 for that activity. But, is it just a period of time in which the L2s start to expand out? And as they kind of balloon up and they have growth, that's going to lead back to some of that demand coming back directly onto Ethereum.
Yeah, a bit of a growing pains, right? You got to figure out like how are you going to go ahead and kind of come into this kind of mature L2 world that you paint for yourself. And in order to get there, you got to go through those pains of, where the main net, the L1 is not going to realize as many fees. And, I have some comments regarding how they could have done that better, but it was sort of known that they were going to have these low fee issues take root, and it has, right? But we see it, in my opinion, this inflection point taking place where they've kind of matured to a state where the L2s are getting very close to kind of hitting that tipping point. But before I get into the fees, I wanted to finish up Solana real quick. I was only bringing this up because the inflection point with what happened with Pump.Fund, the fees on Solana, and coinciding with the ETH USD chart, and then you see kind of these net flows taking place.
Producer, there. Can we? Well, we're looking at Arbitrum right now. Is that the right chart? Do we have the right one up?
I was just going to get into where kind of all the soul is sitting.
There we go.
Yeah, I was just trying to say I got into Ethereum because I wanted to show that, as these fees dip, where's the activity going? It looks like it's starting to move over to Ethereum. But one thing that I did see in terms of the supply side when it came to Solana was what's going on with their liquid staking tokens. And I need to get into more of the ecosystem over there to get a better understanding of their supply. But you kind of had it, top out early November. I don't know if restaking tokens, what's going on. Maybe some of the supply went over there. But as far as like how the usage of SOL tokens is transpiring. You had a little bit of a pullback, and 1.4 million for Solana is like minuscule. So it's not like this is a big amount. It's nothing to be crazy about, which when we think about Sol right now, the predominant usage of it is to act as that currency to take part in what we were talking about earlier, right? So it's starting to evolve into these higher forms of usage. Like a lot of the Sol tokens that are staked are actually just kind of like investments for estates, if you will.
Mm-hmm.
So it's kind of hard to, like I always tell people, like, what's the supply of Solana? What's the circulating supply? Okay, go check out how much is staked by all these estates. Okay, now redo your analysis. And then that's all when they kind of see like, okay, this is kind of hard to figure out. It's kind of hard to tease out, right? But if we just focus on the fees, it does give us a nice insight. So that's where Solana sits. You know, I want to see activity pick up, maybe a replacement for pump.fund shows up and starts to garner some interest over there. That's something to look out for. But next week, I do hope to dive into more of the supply because I know there's some interesting developments taking place on there. At least I see it on my timeline. So I hope to get into, hopefully find a project or two that's interesting and we could talk about over there. But that's kind of it for Solana that I had for today.
Okay.
But getting back to Ethereum, I mentioned, you know, we saw all the AI agents really start to go crazy over on the base network. And then we see even OP's mainnet starting to rise in transaction activity. And you even see Arbitrum starting to kind of come back to life after they've lost a lot of interest in users of late. And so you see the flow of tokens coming out of Ethereum, moving into these L2s. It's really getting ready to have that maturation in those growing pains that were expected. And really, did I just stop sharing?
It looks like we're missing something here. I'm just seeing our backdrop.
Yep. Looks like I disabled the video by accident. So let me
bring that back.
Yep. Let me bring the chart that I'm up right now. Hopefully you can see it now.
Yes.
Which is you're starting to see the fees start to tick up. And a lot of fees are starting to show up on where the L2s can kind of surface on mainnet, which is the blob market. And before we were having these values that were like one way, right? Which is like, I think it's like 1 billion. I think one Gwei is like 1 billion more than Wei. So when we see 1710 here, these values are sort of significant, right? This is actually driving some of the fee usage on the network. And I know 176 ETH burn over the last week is not much, but you're starting to see fees pick up and it's starting to grow, right? Here's sort of the main net fees, the average value over time. It's trending in the right direction for this week. And then you can kind of see it also coincides a little bit with the ETF flows. So that's the demand side. You see a lot of activity moving to the L2s. You're starting to see those activities result in more fees coming onto the layer 1 network of Ethereum. And so on the demand side, you see some positives showing up over on Ethereum. On Solana at the moment, it looks like it's having a little bit of pullback. So we kind of have to wait and see, can it recover on the pump.fund side, or perhaps some other protocol starts to pick up over there. And then when we got into Bitcoin, a lot of the flows, a lot of the demand, a lot of the fees are being kind of correlated with a lot of the ETF flows.
So if I could sum this up, you do see activity on Bitcoin, but it's nothing that would really look sustainable. Solana looks like it's seen a bit of a drop off, mostly because of pump.fund. Needs something new, a new catalyst to kind of come in and start to pick up. And then Ethereum looks like the strategy that it's been playing, which is really a long game for a long time, maybe is starting to get some movement. As you said, you've got OP, Arbitrum base starting to pick up from an L2 perspective, take in some of that volume, and you're going to start to see some of the movement on the blobs on Ethereum, which is all good signs that demand is returning for or sorry, when we talk about supply, where the supply is. But it seems to be good activity for Ethereum, more of a positive.
Yeah, you track the supply, it's moving into the L2s, and those L2s are generating demand back to the L1. So that's healthy. Like we see where the money's going. We see it's being used in virtuals and these AI agents. So there's something there, right? People can do something. On the Bitcoin side, when we track the supply, it's moving these L2s, and they're really just trying to earn points, which is not going to have a lot of momentum long term. So we kind of look at, the 22-day period here, end of December, what's going to happen to that supply? I have to imagine it's going to move kind of just back into people's wallets. Like there's nothing sticky there at the moment. There's not services. So it's really just dependent upon ETF flows, which I do think are going to be sustainable here for quite a bit. I don't think we've saturated that anytime soon. And so that's so as far as like the fees are concerned, like it's good, right? But we, us sitting on chain, we want to find something that's a little bit more kind of crypto native, which fingers crossed we do.
Yeah, and I'm hopeful as I go down the path of looking at sort of the Bitcoin assets, including the ordinals, ruins, stamps, which recently came out. Starting to see some opportunities for those. We'll see if they start to be a sinkhole, a place where some of that supply moves. But more to come on that. Hopefully, we can start to see some of that in the next month or so. More to come. All right, Ben. Well, anything else from a flow perspective?
No, nothing on my side. Again, if anybody has any protocols that they see absorbing some capital or coming up, send me a note. As far as Solana is concerned, please tell me I'm an idiot and send me some good projects to look at that are absorbing some flow, or maybe some narratives I missed, because Solana's built some great tooling. It's really got this great execution environment. So there's a lot of positives over there, and I want to highlight some of those positive use cases for its supply and activity outside of kind of the gambling arena.
Outside of that, that's a big ask. All right. Well, with that, guys, we're going to wrap up this week's Trading Pitch show. Hopefully you enjoyed some of the trade opportunities that Amit and Benjamin shared, as well as getting excited about using AI on chain. I know I am. And then obviously from a flow perspective, come back here. This is where you're going to be learning about where the chains are starting to build up before I think a lot of the action really becomes materialized across your timeline, wherever you're getting your information feed. So this is a good way to be able to track that, really also get a better sense of the overall health of these ecosystems. So but I'll leave you with my PSA. You should always have a little bit of dry powder. Even though you definitely need to be in the market, doesn't mean everything has to be deployed at all times. Definitely have some of that and be prepared for those next opportunities. This is Marconi White signing off.